guys. But let's get started. Okay, so welcome to day 3 of the 3-day Blitz. A bit of a strange start to day 3, but that part wasn't recorded, so I think we can move on from there. Okay, so in day 3, we're going to be talking about actually taking trades, actually using what we talked about in day 1 and day 2 to actually take trades. Because, you know, learning support resistance and learning candlesticks analysis is all well and good, but if you can't actually use those to take trades, then it's kind of useless. Now, for those of you who were with us at the end or towards the end of yesterday's webinar, you'll remember I placed some support resistance on GBP New Zealand and some other pairs. I think GBP New Zealand was the last pair I did. And you'll see that one of the trades that we actually got a trade from here. So I'm not sure if I would have taken this trade because it's a little bit, wait, let me change the color of this line real quick. It's just easier when to track a line back when you change the color of it. Yeah, maybe I would have taken this, maybe not, I'm not sure. But I want to look at this setup because we placed this line yesterday and then the trade kind of, it worked out. There was a short trade. I mean, it wasn't a fantastic trade because of this long upper wick, but I want to check out that trade. But also, we're just going to check out some of the trades that I've recently taken. And I just want to show you guys how I'm using support resistance and candlestick analysis together to actually take the trades. So this goes beyond the analysis part and actually into the trading part, actually into the entering the market part. I was just reading the chat. We're still talking about PC gaming. Okay. So did I take the Euro USD setup today? Nope. What setup? Ooh, short there. Yeah, that would have failed. There were some failed trades today. Some members in the advanced course took some trades and they didn't work out. We didn't take the Euro USD trade though, but that would have been a failed trade. But there were a few. What was the trade? I think it was AUD CAD. We can look at that too because I like looking at failed trades. You know, I don't like it when, because I've checked out a few Forex webinars and stuff, and you tend to find that in Forex webinars, what they do is they go over all the best trades, you know, all the trades that worked out, all the trades that were really good. But you don't really learn a lot from the good trades, do you? You just see a trade that worked out. So I'm going to go over some bad trades today too. Just want to double check this. Yeah, okay. This was a trade taken in the advanced course today that didn't work out. It failed. I don't really trade this pair that often, so I don't have proper support resistance for it. So I'm just going to do some very quick support resistance. This is more guesswork than it is accurate support resistance. Actually, perhaps down here. So basically, today's webinar is going to be just a little messy. We're just going to look at trades. And you guys are free to suggest some trades too. If you guys have taken any trades using my strategy, good trades, bad trades, whatever, just feel free to mention them and we'll check them out. We'll have a look at a bit of the trades and I'll kind of explain why it worked out, why it failed, and I'm going to show you guys the whole concept behind entering the trades. Now, it's kind of hard to cover all of that in one webinar. It just is. I can't do it. So we're also going to be talking about this in the blog. And I'm going to make a post in the blog. When I post this video on my blog, I'm going to make a post explaining just the basic ideas of how I enter trades. So we're going to start with AUD USD, I think, because this was a trade I took this week. I gave you guys this example in the first webinar in this series. So I want to do this. I want to show you guys this one in a little more detail, and probably also this one. I'll explain the entries and the stop losses and all that stuff. Is it dangerous to trade? You failed on Euro USD. All right, fair enough. Yeah, it turned around quite fast. I think something clearly happened around about. Wait, let's go here. We were talking about this in the advanced course. You know, what happened here and why these trades kind of failed all of a sudden. Something clearly happened that turned all this stuff around. I don't really know why it turned around, but yeah, it was clear that something happened that turned everything around, unfortunately. So, you know, it happens. But we'll check out this trade. We're going to start with AUD USD though. Okay, we'll start with this one. All right, so if you guys were here for the first 2 days, and if you weren't, there's going to be recordings put up on the blog. But if you guys were here for the first 2 days, you'll remember, you know, the basics of my strategy. Preceding trend, so that's the trend that comes before the indecision. Indecision forming on top of an area of support. And you know what an area of support is because we went through this yesterday. A support area is just an area full of buyers. So an area like this where buyers are concentrated. So when a preceding trend heads into an area of support and we get a candle like this, indecision, that indicates that we went from a sell trend, we went from a trend controlled by sellers, a bearish trend, into a period where buyers and sellers are struggling. That's why we have the long lower wick. That's why we have the small body, small upper wick. And then what comes next? What comes next is the reversal trend. This is the reversal trend here. Now the reversal trend is where I make my pips. That's, you know, that's where I make the money. But it's not as simple as just entering whenever you see one of these candles. You can't do that because that's just not how it works. You have to actually think about where you're entering. And the most important thing is something I mentioned in the first webinar. It's a question that you have to ask yourself. Does anyone remember that question? Yep, that's right. For everyone watching the recording, you can't see the chat. People are saying who's in control. So that's the question you have to ask yourself at all times in Forex. Who's in control, buyers or sellers? So when you've got this candle here, you ask yourself who's in control, buyers or sellers. Answer is obviously they're struggling. They're struggling for control of price. But then this candle comes along, all right? And we have to imagine this candle as a candle that has just opened, not as the complete candle you're seeing right now. You have to imagine this as a candle that has just opened. So this candle, it starts to push up. It starts to push up. And you ask yourself, as it's moving up, who's in control, buyers or sellers? But the answer to that question is you're not really sure, because buyers have to prove that they've taken control of price, you know? You can't just assume they've taken control of price and jump into a trade. If you do that, you're going to make mistakes. So you need buyers to prove to you that they've taken control of price. You need to see proof. And where is that proof? For me, it's pretty simple. When buyers create a higher high, when they break the high of the previous candle, that is proof. Or when they break another significant level. But, you know, 95% of the time these days, I use the high of the previous candle. So the high of the previous candle is here. That is the high of the previous candle. When buyers are able to break that high, that indicates that they've taken control of price because they've done what it is in a buyer's nature to do. It's in a buyer's nature to create higher highs and higher lows. So when that higher high is created, that tells me buyers are in control of price. And, you know, sometimes I'm wrong. Sometimes buyers aren't in control of price and I lose the trade, but most of the time I'm right. Most of the time buyers do in fact take control of price when they make a new high. So that is my entry point. When buyers make a new high, when they break it by 1 or 2 pips, I jump into the trade. So finding an entry point is not really that hard. The entry point is when buyers prove they've taken control of price. That's where I enter. So the logic is still quite simple. We're still using price and we're still just asking ourselves who's in control of price. Because when they create a higher high and you ask yourself that question, who is in control of price? The answer is buyers. They've created a higher high. So they are now in control of price. Tobias is asking, does this work on the 1 hour too? Yes, but it's not as good. Trading in general is more profitable the higher you go. Well, it doesn't really count for the weekly charts, but trading in general is profitable the higher you go. So the higher you go, the better it is. 1 hour is kind of... some people in the advanced course trade 1 hour charts, yeah, but it's not as profitable as 4 hour, not as profitable as 6, not as profitable as 8. 8 is like... 8 and 12 hour are my two favorite time frames, I have to say. The 8 hour and the 12, but also the 6 hour has been giving me a lot of trades recently. These three are odd time frames, you know. You don't really... not many people trade... Ooh, damn, I've done the lines wrong. I'll just use the highlight tool, that's better. Not many people trade 6 hour, 8 hour, 12 hour, but they're my favorite time frames at the moment. 8 hour in particular has been the best time frame for me for a while now. Aaron, the higher you go, the more you need to invest. Yeah, kind of. But, you know, the difference between 1 hour and 6 hour is not that vast. And, you know, also, you can just change you can change your position size. I mean, it's not necessarily the higher you go, the more you have to invest. But yeah, your stop losses are going to be wider, definitely. By the way, guys, when I pause, it's not because I've forgotten what to say. It's just because I'm reading the chat. And I'm a very slow reader. All right, cool. There's nothing I have to respond to right now. So, basically, the entry is simple. It's still using just a simple price action concept. When buyers take control of price, they confirm they have control of price. That's where I enter because I want to go along with the buyers. And the buyers are at their strongest down here at support. This is where buyers are their strongest because this is an area of buyers. It's an area we've identified beforehand to be full of buyers. So when buyers take control of price, you want to enter as close to the support area as possible. And this is pretty close. I mean, it'd be better if it was a bit closer, but it is pretty close. So, you know, the entry part is pretty simple. The stop loss is a little bit tougher. With stop losses, the thing is, ideally, you'd want your stop loss here. You know, that's a 43 pip stop loss. That's too big. You know, ideally, you want to place your stop loss below the low of the indecision candle. Why? Well, the answer is simple, because that's a lower low. So if sellers are able to push down, break this low, that indicates they've taken control of price, so you shouldn't be in this trade. So your stop loss ideally is going to be at the low of the indecision candle, because that's a lower low. But a lot of the times that stop loss is just too wide. I mean, with this trade, 43 pip stop, your first target would be somewhere around here. You know, this is where I would be closing out part of my position, somewhere around this area. It'd be less than 1-to-1 risk-reward ratio on my first target. Nah. So stop loss is kind of subjective. You need to decide where you want to put it. The safest option is obviously here, because this one is the least likely to get hit. And if buyers don't take immediate control of price, you're still giving yourself a bit of room to breathe. But a lot of the times my stop loss just ends up being placed around about here. Now, why do I place it here? I just want to place it a little bit lower than the support area. So, you know, the support area is roughly here in the middle. So I just want to place it a little bit lower, you know, 10, 15 pips. It depends on the pair. So yeah, that's around about 15 pips in this case on AUD USD. just placing your stop loss below the support area, just a little bit below the support area, because it gives it room to breathe, but also because, again, this is all based on price action. Support area, what is it? It's an area full of buyers. So if sellers are able to push through this area full of buyers and hit my support, my stop loss, that indicates that sellers have taken control of price, and I don't really want to be in this trade because I've gone long assuming buyers are in control of price. If sellers take control of price, they break through an area full of buyers, that indicates sellers are strong, and I don't really want to be in this trade anymore. So the stop loss in this case is around about 30 pips. Again, guys, if I'm stopping, it's just because I'm trying to catch up on the chart. Phil, that's a good question. Is my first target 1-to-1 risk reward? Yeah, my first target, I never do go worse than 1-to-1. I don't really like doing 1-to-1 on my first target, but if I have to, I'll do it. My first target is usually based on just looking to the left. It's really that simple. Just when you enter a trade, look to the left. So let's zoom out a bit. Look to the left and see what you see on the left. So in this case, okay, I'm entering this trade. I look to the left and I see this. You know, so when price came down to here last time, it kind of got stuck in this area. So that's a little worrying. You know, what happened there that caused price to get stuck? And I scroll back a bit more. In this case, we don't really have any more data that's worth viewing, so we won't. But my first target, it tends to be roughly halfway between the two support resistance areas. So these are the two support resistance areas. I tend to go around about halfway between them, because when price moves, it tends to push up and then slow down when it gets you know, I actually came up with a better way to explain this. And I'm going to explain it now. Can I get a different color on this tool? Oh yeah, I can. Awesome. All right, think about it like this, okay? I'm going to change this back to yellow before I talk, actually, because I prefer the yellow. All right, think about it like this. My first target tends to be around about halfway, around about here-ish. And the reasoning for that is this is a support area. So this is an area full of buyers. The further price moves away from the area full of buyers, the weaker the buyers get. The closer it approaches the resistance area full of sellers, the stronger the sellers get. So when it starts to hit about halfway, you'll find a lot of the times that price starts to stall a little bit, because, you know, buyers are getting weaker, sellers are getting stronger, price starts to stall. It doesn't usually stop and turn around at this point, but it does start to stall, and sometimes it can stop and turn around. So that's why I tend to take out my first target roughly here. When price starts to get too far from the support area, buyers start to get weaker, I close out my first half. I then move my stop loss to break even. So that's the entry point. I move my stop loss to the entry point. And the rest of the position remains open, and I allow that to hit the next target. Yeah, Christian. And it's not only about doing halfway between the support resistance areas. It's also just by looking at where price has stalled in the past. Most times you'll find that it is halfway between, but if you just look to the left for areas of congestion between two support resistance areas, it kind of gives you an idea of where price is going to stall next time. You just look at areas of congestion where price got held up last time, and it's likely that price is going to get held up there again. It's something I call minor support resistance. So the support resistance area isn't strong enough to actually place on your chart as a proper support resistance area, but it's a form of minor support resistance. Price might get stuck here when it moves up, so it's safe to take part of your position out there, move your stop loss to break even, and then let the rest run. And if it runs all the way up, fantastic. If it comes back down and hits your stop loss, which is set at your entry, then you've still made profit on the trade. Someone asked what my success rate is with this strategy. It's well above 50%. It depends though. I mean, it depends how you use the strategy. But you're asking my success rate. This year it's been a bit lower than usual. Normally my success rate is up in the 80% area, but this year it's been something like 74% at last count. But I haven't really counted for, I don't know, 2 months now. I don't think it's gone higher than 74% though. Ivo is asking if there's no minor support resistance, then first target is just halfway between the two support resistance areas. Yeah, because if there's no minor support resistance, there's still the fact that around about halfway, buyers start to get weak, sellers start to get stronger. So we're having kind of like a change between buyers and sellers. So around about halfway, at that point where buyers start to get weaker, is where you want to close out your first target. If there is evidence that you are stopped out because the opposition takes control, do you reverse the trade? No, I don't. I don't trade breakouts from support resistance areas. I only trade reversals at the moment. Until volatility picks up again, until we start to see volatility that we did, or probably not as bad or not as much volatility as 2008, but until we get into kind of higher volatility periods, I don't find breakout trading, breaks of support resistance areas. So going long when it breaks like this, I don't find it to be that effective and that profitable. David, no, I do not place live trades without Parry. This is a demo account. I use this account only for showing, for webinars. Max, how do I measure volatility? There's websites out there that measure volatility. They have, volatility over time for pretty much every pair you want. What percentage of my capital do I risk on each trade? I don't really think that applies to most traders who are here tonight. I risk like 0.1%. At this point, my account I don't grow it anymore. I'm not looking to grow my account. I'm just looking to maintain my account. My Forex account at the moment gives me enough money to live comfortably, but I don't really grow the account anymore. So I don't risk that much these days. Confused about the time frame. I'm not sure what you mean, Andy. Do you want to rephrase that question, please? And let's look at this other trade, okay? Now this is a trade I actually took this week, so this will be a better example. I don't give broker recommendations, by the way. I used to, but I don't recommend brokers. I don't like recommending brokers to people. How many trades a week do I take? I take roughly 2 trades per week. But again, I'm just at the point where I'm maintaining my account. I'm not at the point where I'm growing my account. There are more trades than 2 trades per week to take. But I only take the 2 best setups I find each week. Two trades per week on 4 hour, 6 hour, 8 hour, 12 hour. Yeah, I switched time frames. We're gonna stop the questions now. We're gonna stop the questions now. I will answer your question, Lornette, about the switching time frames. Tobias, I'll answer your question too, but please no more questions right now. Let's just continue with explaining the actual entry phase and stuff like that. Yeah, we'll take a look at this trade. Now, this is a trade I actually took this week, so you know I wanted to show you guys this trade because it's a good example. Now, this trade was somewhat risky because it was split by a weekend. So this side here was the previous week, and this was the new week. I don't normally take trades like this that are split by weekends, but recently I've been finding that they tend to work out really well. So I've started taking them again. It's been a long time that I don't take trades split by weekends, but this setup here, it wasn't a perfect setup, but if you look at it, it follows all the rules of my strategy. You know, we got a strong preceding trend. Well, not exceptionally strong, but it is still a pretty good preceding trend. Then we got indecision forming on top of a resistance area. Now, this is a proven resistance area. We did see a reversal from here. This one wasn't really tradable, but it's still a reversal, you know. We still got buyers coming up to here being rejected. So this is a good resistance area. It is proven. It does have several bounces or price stalled on here for a while. So it is a good resistance area. Then we got indecision forming on there. Fantastic. Then, you know, there's the next step. Okay. Next step is the reversal trend. And the reversal trend was quite quick on this one. The entry was at the low of the indecision because I wanted to see a lower low being created. I wanted to see sellers creating a lower low, because when sellers create a lower low, that proves to me that they've taken control of price. So the entry was here. Stop loss was just above the resistance area. So it wasn't that big a stop loss, 20 something pips. First target was here, around about 36 pips. So that's better than 1-to-1 on my first target. Now the first target was here for the same reasons. It would have been, wait, let me highlight this, it's better. First target was here for the same reasons it would have been here when we were trading it long from the first trade I showed you guys. The first target was here because we've seen congestion here in the past, sorry. We've seen congestion here in the past. And also it is around about halfway between, you know, and halfway between is where you start to see a struggle between buyers and sellers. So that's where the first target was. It was better than 1-to-1 risk reward ratio, which is fantastic. Second target was down here at the support area. So this was a fantastic trade. It was an easy trade. It didn't last very long at all. Now someone asked, wait, what did they ask? They asked, do I sit there and watch the trade the whole time? No, definitely not. That would be horrible. You should never watch your trades. If you watch your trades, you tend to, like, even these days, if I watch my trades, I tend to kind of get a bit nervous and want to jump out of the trade. I mean, it's just not worth it. There's no reason to. You don't need to watch your trades. Set some alarms. Just set alarms that will go to your phone. And when the alarm rings, you could come check out what's happened. It's kind of exciting for me personally. I like setting an alarm. All right, let's say I enter this trade, for example. I'd set an alarm around about here, or maybe just halfway between in the resistance area, and then I'd set an alarm around about, well, for my first target, I'd probably set it around about here. Then when the alarm rings, you kind of get this rush of excitement to come and see, like, ooh, which direction has it gone? Has it come down and hit this alarm here, which is what you're hoping for, obviously? Or is it going up to my stop loss, which is what you're not hoping for? But no, I don't sit around and watch my trades. That would be it's not good. It's not effective. Yeah, sometimes I use alarms prior to my trades for entries. Sometimes, you know, the beauty of trading 8-hour charts or 6-hour charts is you don't have to check your charts that often. So let's use this trade for an example, because this one was split by a weekend. So basically you check your chart, let's say every 8 hours or every 6 hours, whatever. Every time a candle closes, roughly, you check your charts. You know, most people have time to check their charts every 6 hours. So you check your chart every 6 hours, and eventually it hits your support area and this candle forms. Fantastic, that candle is formed. Now you know that price is possibly going to reverse from here. You know that you might see a reversal trade. So what do? You know, you set an alarm. I mean, you shouldn't sit around and just wait for like 2 hours for price to break up and push through that area. Set an alarm and go do something else. You should set your alarm a little bit before. And you know, sometimes it does suck because sometimes your alarm does get triggered and then it just doesn't break. But if you set your alarm here, let's say, when price gets close to that area, your alarm triggers, you come back, and then you're pretty much always in time for the entry. It depends. In America, it is a little bit more difficult to close half your trade. A lot of people in the advanced course, what they do is they'll open 2 positions. So let's say they go long with 2 lots. Then they'll go short with 1 lot to close out the position. And then that will leave 1 lot still in the market. Helton, sometimes I do set pending orders too. It depends. I mean, you can use a pending order instead of an alarm. It just depends on if I'm going to be at my computer. You know, if I know I'm going to be there all day, I'll set an alarm, because I prefer to enter manually, because entering manually is usually better, because you can apply kind of discretion. And, you know, sometimes you'll find a better entry. Sometimes price will pop up, break this area, and then it'll come back down 3 or 4 pips, and then you could get in when it pops back down. So I prefer to enter manually, but sometimes I'll use an order to get I'll set an order to get me into that trade. It just depends. Yeah, a lot of people do sit and watch, and it's always a really bad thing. You shouldn't sit and watch your charts. I'm not sure what you mean, Tobias. Do you mean like if you're in a trade and then sellers take control of the trade? Is there any way to exit early? But how do you? Trade is asking, but how do you know if you don't watch if the price reverses suddenly? I mean, that's trading, man. Sometimes price is going to reverse suddenly, and that's what your stop loss is for. Your stop loss is there for a reason. It's there to protect you when price reverses suddenly, when it doesn't go in your direction. Sometimes it happens. It sucks, but it happens. You know, like Euro USD today. This was a setup. This was a setup as per the rules of my strategy. It was a decent setup. And this one, let's look at this trade in a little more detail. I mean, the preceding trend wasn't that fantastic. It went up, came down, and then continued up. So the preceding trend wasn't that great. But, you know, the preceding trend aside, it was still kind of a decent preceding trend. It wasn't that bad. We got indecision forming on top of a resistance area. Fantastic. Looks like a good trade. You know, you jump in. You could jump in either... You have two options with this one. Just at the low of the indecision candle when it's first made its lower low, or you could let it drop just a little bit lower, just, you know, to just so it kind of gets away from the support area. Either way, this trade would have been triggered. Let's just imagine it was at the low of the indecision candle that you entered. Price came down 23 pips, 21 pips, and then it just shot up. You know, that stuff's going to happen. You just have to learn to live with it. It's just something that happens. This trade, you could have had an extremely tight stop loss though. If your entry was there, yeah, you would have had like a 24 pip stop loss. It wouldn't have been that huge a loss. Well, it depends obviously on how large your position was. But with good money management, it wouldn't have been that bad. But, you know, it happens. Sometimes you're going to lose trades. This trade just didn't work out. It just didn't. It could have been news. I don't think it was. There was another trade too that some guys in the advanced course took. Oops. Yeah, there were two kind of bad trades today. Yeah, okay, this one. So, you know, normally we don't get 2 free bad trades in a day. But today was just a sucky day. And, you know, sometimes you do have bad days in trading. Sometimes things are working out and then they just stop working. It was news. I don't think this one here was news though. Maybe the Euro USD one because it was at a different time. But this one here was not news. Because someone in the advanced forum said they thought it was news, and I looked it up and there was no news that affected this trade. This trade just failed. Steve is saying, Nick, for Euro USD, the high of the indecision candle was broken before the low. Will this make you cancel your orders? I did not know that about this trade. It wouldn't necessarily make me cancel my orders, but it make me a little more cautious about the trade. Usually what I do with my trades, I just have a checklist in my head, not on paper, in my head. And when I look at a trade setup, I look at what's wrong with it, you know? With this trade, the first thing that would be wrong with it is the preceding trend is not that good. You know, it moved away, like it came back down. So the preceding trend, not that good. Second thing that would be wrong with it is the indecision candle. You know, it's not that great. I mean, it's kind of small. The lower wick is not that good. Upper wick is not that good. So I'm not that convinced by this indecision candle. Now, the third thing in this case would be what you just mentioned. If price made a new high, you know, three things for me, 3 things that I don't like about the trade usually means I stay out of the trade, personally. There's people in the advanced course who do it differently. They would just enter this trade anyway. They're willing to take more risk. I personally don't like really taking that much risk in my trading, so I'd probably not have taken this trade. But, you know, I'm not saying that this wasn't a trade as per the rules of my strategy. It's definitely a trade. I'm just saying I don't like to take that much risk. So yeah, if the high of the indecision candle is broken by this candle here, that is a reason for me to possibly stay out of the trade if there are other reasons to stay out of this trade. But you also have to consider, you know, that the high of this indecision candle is quite low, so it's quite easy for it to be broken. You know, it's not a major high, so I'm not sure. I'm not sure if I would have gone on this trade. Probably not. But, you know, it's easy to say that with hindsight. Looking at it after it's complete, it's easy to say I probably wouldn't have entered. But in the moment, I could have entered. I'm not sure. Yeah, the AUD CAD trade, that's more interesting because the AUD CAD trade did look pretty nice. And yeah, this one just didn't work out. I mean, price pushed up, entry was broken, higher than decision candle. Stop loss was, probably 40 pips would have been fine on this one, below the low of the indecision candle. It just didn't work out. It pushed up a tiny bit and then reversed. And there was no real way to save yourself from this trade. It looked better on the 6 hour, by the way. There was no real way to save yourself from this trade. There's no way to exit early. This one would have just went straight and hit your stop loss and you would have been out. Ooh, someone said, good question, Stephen, but I don't see Stephen's question. Where was it? Oh, that was a question I've already answered. Okay, fantastic. Max, no, it would not be a good idea to straddle the indecision candle. I think you asked that question before. Do I trade the continuation? No. It's not safe trading breakout trades these days. Breakout trades were fantastic back in 2008. I'll show you why. What's the button to... Where are we? 2000, still 2014. Done the wrong way around. Sorry guys, I got a new keyboard yesterday or the day before. It's a mechanical keyboard. It makes a lot of sound. So I'm sorry if you guys can hear this thing clicking away. Around about here. Okay. So this is Euro USD in 2008. Now, in 2008, Euro USD was completely different. These support resistance areas we have, look how closely spaced together they are. One candle is spanning between 3 of them, a single candle. 223 pips. And that's not even a big candle. Let's look at a big candle. Maybe this one. 528 pips. How often these days do you see a 528 pip candle on Euro USD? 541 pips. So my point is, back in 2008, 2009, even part of 2010, straddling indecision candles was okay. It was advisable because price moved so much that it was easy to make 100 pips when price came out from the other side of an indecision candle. It was simple. I mean, price would just move so much. It was easy to make 400 pips in a day. But it's also easy to lose those kind of pips. So I don't particularly want the market to go back to what it was in 2008. So straddling indecision candles when the market's like this is fine because price moves so much, it's easy to hit your targets. But these days, price is moving a lot slower. There's a lot less volume than there used to be. I mean, these are the same support resistance areas. Look at them now. Look at them these days. It's just completely different. That was like... This is what the support resistance areas look like back in 2008, this closely spaced together. So straddling indecision candles just doesn't work these days, man. It's really not worth it. It's way, way, way too risky. I would not do it. Yeah, I traded back in 2008. I'm like 28 years old. Possibly 29. I honestly do not remember. I don't remember how old I am. I'm either 28 or 29. April 17th, 1986. I'd be happy. I'm happier with hearing that I'm 28. Okay, that's good because, I don't want to be 30 yet. By the way, guys, I'm staying silent because I'm reading. How old was I when I started trading? Technically, I was 16, but I wouldn't really call it started trading. There was a competition in my school. um, for stock trading, and I did that competition. But when I started trading Forex and when I started getting good at Forex, I guess was around about, well, no, I started trading Forex at 18. I started getting good at around about 20-ish. Okay, that's a good question actually. Does this strategy work in futures? Yeah, it does. I I mean, in the end, this is just price action. It's just basically understanding buyers and sellers. And buyers and sellers, they act the same in futures as they do in Forex, as they do in stock. Well, not so much stocks. Stocks are a little bit different, but it does work in stocks. It works all over the place. I've been messing around with futures in the last few months, and it does work quite well in futures. Yeah, we're going to look at some more setups. Sorry, guys, we're getting a bit distracted. Um, my webinars they tend to be more conversations than they do webinars. You know, conversations with traders, and this one, the first two were more webinars, and this one was this one is starting to feel more like a conversation. I want you to check out this GBP New Zealand trade. Now, I didn't take this one. I didn't even notice it that it happened until just before the start of this webinar. Not even sure if it's a trade that would have been taken. It looks like it though. Now, you'll remember that at the end of the last webinar, I just threw up some support resistance areas for this pair. I just went through it and threw up some support resistance areas. Now, it turned out from those support resistance areas that we got a pretty decent trade last night, which I kind of wish I took. All right, just let me fix up these support resistance areas. I don't like it when they don't have the lines around them. Then we'll take a look at this setup. And we'll take a look if it was a viable setup. I mean, it looks viable just at a glance, but, you know, just because it looks like a decent setup, it doesn't mean it is a decent setup. You need to look at the risk-reward ratio. You need to see the numbers to figure out if it's actually something that you would trade. So let's look at the numbers. All right, so wait, I'll highlight it for those who are new and don't know where the setup is. We got a pretty nice, strong, bullish preceding trend. We got indecision forming on an area of resistance. So those are kind of like the first two steps. Those are, you know, preceding trend, indecision forming on resistance. That's what we look for. Then we start to see the beginnings of a reversal trend, and this is where the reversal trend took off. So let's look at the numbers here. Entry would be roughly here. Stop loss would be that's a pretty large stop loss, isn't it? I don't think this would have been a viable trade. Oh, actually, I switched to the 6 hour. Let's look at it on the 8 hour. It looks a bit better here. 55 pip stop. Yeah, you could pull off like a 1-to-1 risk reward ratio on this trade. You could pull it off. It'd be like a very close, you know. It'd be very close, but you could pull off a 1-to-1 risk reward ratio on this trade. So, Andron, you took the trade? Do you mean this trade? Right, yeah. All right, that's cool. Congratulations. Did you get your support resistance from last night's webinar? Or did you just do it yourself? You did it yourself. Nice. Good work then. Oh, it would have been good work either way, but congrats. No, I don't use trailing stops. But anyway, let's look at this trade a little more. All right, so first target, you could have pulled off one-to-one risk rewards. Second target, I mean, this should be spread out a bit more. Yeah, second target, you probably would have closed out around about here when it dropped to this low. Possibly not, because it might have reversed too quickly for you to close out. And if you didn't have a order there to close it out, you might still be in the trade. But yeah, it really just depends how you managed this trade. But this could have easily hit its both targets. It could have easily hit its first target and its second target of around about 90 pips would be the second target. But if you managed to trade a little differently, then you might not have hit that second target. You may have got stopped out when it pushed back up. But either way, this is a good trade. And this is an example of, you know, the support resistance areas. We just threw these support resistance areas up towards the end of last night's webinar. If I remember correctly, I done these ones as we were closing off the webinar in the last 30 seconds or so. You know, so these are support resistance areas placed in 30 seconds. Not much time at all. But you do see the indecision and it actually leads to a good trade. Now, you know, support resistance is easy to place. The candles forming on support resistance, they're easy to identify. So all of this is pretty easy. I mean, it's not that hard. When you think about it step by step, it's pretty simple. But the biggest challenge in trading, and that's something I can't teach you in these webinars, is managing your trades. Because this part is simple, you know. I think most of you are able to identify the setups at this point. After these free webinars, it's easy to identify the setups. But the hard part comes with the managing, because I'll find a lot of the times in the advanced course, someone will take a trade and they'll get, you know, 10 pips or maybe minus 20 pips, and I'll get 60 pips from it. And it just comes down to the management of the trade. You need to understand price. So the thing I want to get through to everyone tonight, and it's the most important thing I think that you can do in your trading. You don't stop asking yourself who's in control of price. You don't stop asking yourself who's in control of price after you're in the trade. I explained yesterday what I changed. We changed support resistance areas. Malta is asking me what I changed about my strategy. The way we do support resistance areas, it's become more dynamic. You should watch yesterday's recording to see that. So yeah, what was I saying? When you're in a trade, don't stop asking yourself who's in control of price. It's still a really, really important question. Even when you're in the trade, you shouldn't be asking yourself that just as you get in the trade. You should ask yourself when you're in the trade, who's in control of price? Because the more you ask yourself that question, the more you train your brain to kind of understand what price is telling you. And the more you understand price, what price is doing, what price is telling you, the more you understand that, the easier it becomes to manage your trades. Because in the end, when you're inside a trade, you're kind of subject to the whims of price. Whatever price does is gonna have an effect on your trade. If price decides, you know, if you were short here and sellers decide, hey, we're not strong enough to keep pushing down, buyers take control of price, then you're screwed. Buyers are going to take control of price, it's going to hit your stop loss. If sellers retain control of price and they push all the way down, fantastic, it's hit your target. You're kind of controlled by price. So you need to understand price. You need to understand what price is doing. You need to understand price when you look at your charts. And asking yourself that question at all times, who is in control of price, is the best way to start understanding price, because you start questioning the charts, you start questioning price, and you start to understand what price is doing, why it's doing it, what it's possibly going to do next based on the evidence you see. And yeah, that's what I wanted to get across today. You know, it's not all about entering the trades, identifying the setups. That's not everything. That is the easy part. The hard part comes when you actually have to get into the trade and you have to manage it and you have to actually trade. And that's where most traders fail. It's in the trading. I'm just reading the chat, guys. There's too much going on in the chat. Trade. No, I don't trade news. Traders asking if I trade news. David's asking a good question. Does it matter if the indecision candle is bearish or bullish? Preferably the indecision candle is going to be bearish in the case of a reversal. A bearish reversal. So ideally your indecision candle is going to be opposite to the trend. So this is the preceding trend. Ideally your indecision candle is going to be opposite to the preceding trend. That's usually the better indecision candle. Obviously, in the case of a bearish trend, ideally your indecision candle, you want it to be bullish. As a newbie, I struggle to know which pairs to trade. Yeah, I wanted to get that because a lot of people have been asking me about that. What pairs do I trade? Which pairs do you trade? I change it a lot, to be honest. I tend to trade whatever pair's the best at the time. So I'll usually have more charts than this open. I'll have my support resistance areas placed on my charts. And I'll just flick through the pairs and I'll just see what's good. I mean, it used to be like 8 years ago, well, maybe a bit less than 8 years ago, 5 to 6 years ago, where I used to trade 2 to 3 pairs. You know, and it was fine back then because the market was moving a lot more than it is now. Like I showed you earlier, I don't want to show you guys again, but obviously 2008, 2009, 2010, market was moving like crazy. And 2 to 3 pairs were enough because you got so many trades, it was so active. These days it's less active. So these days I'll have as many as 10 to 12 pairs open. And I don't really pick those pairs. Usually they're just, I'll throw up some pairs, throw up support resistance, and then I'll look for trades to form on those pairs. There's nothing really to it. It's not like there's a secret to finding the best pair to trade. Just throw up 10 pairs, 12 pairs, throw up your support resistance areas, and just watch. With all those pairs open, you're going to get a trade on them. How do I get around the spreads on the exotics? I don't trade the exotics. Wait, what do you mean by exotics? Because some people have different definitions of exotics. Give me a specific pair as an example. All right, GBP AUD. Okay. My broker doesn't have very big spreads on GBP AUD. Should probably change the broker then. Now USD ZAR, that's more what I would class as an exotic. That pair, I wouldn't trade it. Yeah, I don't know. People have different definitions of what an exotic pair is. Majors, cross pairs, exotic pairs. It doesn't really matter. The point is, if your broker has a 10 pip spread on GBP AUD, you should probably change your broker. And don't trade pairs like USD ZAR or Euro Ruble or USD. Travis, I've been watching GBP AUD today. Is it smart to watch for it to bounce from the 1.860 range? 1.860, 1.860. Essentially, you're asking for support resistance areas for up here. I would say support resistance is roughly at 185.40. Because that lines up with this bounce too, which is quite extreme, but also that bounce there and these lower bounces. Oh, wait, let me put the lines here. See that there? That bounce, and then this bounce, and then this bounce. And that all lines up with this pretty extreme bounce here, which you couldn't really have traded. You could have traded it on the hourly chart. You see the indecision there on the hourly chart, but I probably wouldn't have traded it there. So it wasn't really a trade, but I'd say that there's resistance here on this pair. Something like that. There's some proof of it in the past too. So yeah, I wouldn't go up as high as the 18600. It looks like resistance is a bit lower. Uh, 12-hour has a big indecision candle, but still that wouldn't be a decent trade. Yeah. There's no resistance there. It's too close to the support area here. I wouldn't trade that. Andrew, plus to John's question. That is a good question. Does entry have to be on the same candle? Let's look for an example. Sorry, I just got curious. Well, I'm going to ignore your question for a second and explain why I was switching timeframes here. This failed trade, sometimes you're going to get a failed trade on a smaller time frame, like the 6-hour or 4-hour. Then when you switch up to a hard time frame, like the 12-hour or daily, you'll get a good indecision candle that you can actually trade. In this case, you don't get that. The upper wick of this indecision candle is way too high. But just keep that in mind. Sometimes reversals are forming on the daily. They look like they're forming on the smaller time frame, and you jump in, the trade fails. But then you could switch up to the higher time frame and take the trade again. Or you could switch up to the higher time frame if it hasn't hit your stop loss yet, and you'll see that on the higher time frame the reversal is forming, and you don't exit early. You just leave the trade open, even though it's not working out too well. It's been open for like 12 hours and it's not moving, just because it was taken on the 4-hour, but it's forming on the daily. So you just wait for the reversal to take off on the daily. I was just checking if that was the case, but it's not the case with this specific setup from today. I'm looking for a setup that would answer your question, but I can't see one, and I can't think of one recently. But the question is, does the entry have to be next to the candle, or can it be a few candles later? It can be a few candles later. I tend to have just a general limit of about 3 candles. So if the setup formed on the 6-hour and there's 3 indecision candles, that would be the maximum that I would go for after I enter. If there's 4 indecision candles, 5 indecision candles, and then it pushes down, I'll tend not to take that trade, at least not on the 6-hour. But that's another case where you could pop up to a higher time frame, and maybe on the higher time frame, you're going to have a single indecision candle, and then you just take it on that time frame. So keep that in mind. Switching time frames kind of it just clears up price action sometimes. Sometimes you're looking at the 6 hour and price action is too spread out and you're not getting a clear understanding of what's going on there. So you condense price action a bit by going up to a higher time frame. Or sometimes on the higher time frame, the reversal happened too fast. So had you gone down to a smaller time frame, you would have seen the price action, you would have seen what it was doing, and you would have been able to get into that trade, which is GBP New Zealand is, no, sorry, it wasn't GBP New Zealand. Which one was it? Have a look at EuroCAD 8 hour. What about it? Please give an example of a bad or unusable preceding trend. That's a bit of a tough one because I have to find a bad or unusable preceding trend. Generally speaking, what you want with a preceding trend is you want it to be, you want it to span at least 75% of the way between two support resistance areas. So, where is this? That tool. Okay, this and this. So you want your preceding trend to span at minimum 75% of the way. So this is just roughly, I'm not going to figure out the exact 75%, but as long as your preceding trend starts there, it's fine. If your preceding trend starts halfway, like here, it's not good. This preceding trend here probably wouldn't take this trade. That's not a nice preceding trend. It starts pretty high, maybe that's 75, but probably not. It just doesn't look like a good preceding trend. Look at this big lower wick down here. It's just messy. I can't see any other bad preceding trends, man. It's a tough question because, you know, there's a lot of things that can make a preceding trend bad, or just the whole setup bad, and it's tough to just find a setup that has a bad preceding trend. Yeah, I can't find one, man. Sorry. Just think about it like this, okay? Think about it like this. A preceding trend has to show that either buyers or sellers are in control of price. So you have to see that buyers or sellers are in control of price. Why do you have to see that? Because we're looking for reversals. If buyers aren't in control of price, then the preceding trend's reversing from nothing. The indecision is reversing from nothing. So we need to see that buyers or sellers are in control of price. If they're not in control, then you don't have a reversal. So this is a decent preceding trend because sellers are in control of price. When sellers hit the support area, we get a reversal. But if indecision just forms on a resistance area or a support area and it doesn't have a good preceding trend, you don't take it because it's not reversing from anything. It has to be reversing from something. So with a preceding trend, I can't find an example of a bad one just off the top of my head. I can't remember one, but just keep in mind that you need to see sellers are in control of price or buyers are in control of price, and you see that by the higher highs and the higher highs, higher lows, and lower highs. All right, cool. I'm glad that answered your question. I wish I could find a good example, but it's not easy. Okay, guys, we've been going for an hour and 10 minutes. I am going to be writing a little more. about the entry process and stuff like that on when I post this video. Probably going to post this video sometime tomorrow, along with the other videos. So I'll be explaining things in a little more detail. But other than that, are there any other questions? How long do I spend studying the chart before I make a trade? I'm not sure what you mean by that. You asked that earlier. I'm not sure what you mean. Do you mean how much analysis do I do each day? I don't do much analysis. I don't know, 30, 40 minutes per day at that time. So how much time do I spend preparing for a specific trade? I don't know, maybe 5-10 minutes. Not that much. I mean, when the indecision forms, I just figure out my entry and my target and my stop loss, and then I set it up. It's not that long. What about fundamental analysis? Am I thinking about news? Yeah, I do consider news. I don't trade it, but I mean, if a news release is coming out, that is going to affect whether I'm going to enter the trade. When is the advanced course going to be open? I've been really busy lately, and with the advanced course, I like to be around. You know, especially when new people join the advanced course, I like to be around to answer questions and to help out, you know, especially with the new people. And right now, I'm sorry, but I don't have time to be around. Maybe I will in a week or two, maybe I won't, but the advanced course is not going to open until I have more time to actually spend helping the people who join. I've just been busy recently. GBP/USD is reaching a support resistance area. It is? No, it's not. Oh wait, that's the daily support resistance. Sorry. Oh yeah, it is. Nice. What was your question, Joe? Can you explain what you will watch for to enter a short trade? Sure. That's easy. So GBP/USD is approaching a resistance area right here. Bam. If price pushes up to here, and then we get a nice indecision candle forming, like we saw in the first webinar, you know, a candle kind of like that, probably a bit better than that, but you know, indecision forming right here, roughly right there. Doesn't have to be perfect, but you know, that would be ideal. You know, that would be a trade setup. Has a nice preceding trend. I mean, that's a strong candle. That's a strong candle. So if price pushes into here, we get indecision forming. Yeah, that would be a potential trade. The free course should be open. You should get an email. I don't know why you're not getting an email. Check your spam. I'll fix the issue with the advanced course. Sorry, with the free course. It sounds like there's an issue with the emails. I'll try to fix that. I'll look into it. All right. Anyway, guys, I'm gonna call an end to this webinar. We're 15 minutes over the schedule and I have not eaten yet. I am cooking tonight and I really want to go eat. I'm making venison. Andrew, thanks for asking how my cold is. I thought I was getting a cold, but I think I was wrong. I haven't got a cold. I feel fine today. But yeah, I'm gonna end this webinar, guys. We are gonna do another webinar soon. I want to try do webinars every month. So we are going to do another webinar soon. So yeah, I'll email you guys about that and I'll let you know.